really fun conversation with you last time we chatted, and just wanted to circle back. I thought it'd be fun for others to hear what I got to hear. And maybe it'd be cool to just start with a little bit of your background and sort of how you came to do what you're doing today. And then we'll jump in. I want to talk about how you created a venture capital firm from thin air. And then also I'd love to pick your brain more about the entrepreneur and venture capital community in Africa, because I think that's something that most people here in the US know next to nothing about. And it was super cool to hear you talk about it. So maybe start with your background.
Sure. So a little bit about me. So despite my American accent, I am half Nigerian. My dad's side, him and his brothers moved to the US for higher education. They all married local Minnesotan women, and a bunch of them stayed put in Minnesota, and a number of them, including my own family, went back to Nigeria. So my older sister and I were raised in the US, my younger three siblings in Nigeria. And we grew up watching entrepreneurs in Minnesota versus entrepreneurs in Nigeria. And the difference is when you had everything constant, like same age, same background, gender, same upbringing, only difference where they were building their businesses. And I really grew to understand the innate challenges that entrepreneurs on the continent faced, and that those in the US didn't have to grapple with. But then also the concept of how big of an opportunity, greenfield markets present, and the higher the risk, the higher the reward as an entrepreneur targeting those markets. And yeah, that really just left something in me where I went on to Pomona College, did a Cornell pre-law program, worked at JP Morgan in New York, and then in private equity research. And I was always sort of trying to convince our clients why they should be looking at youth populations in sub-Saharan Africa, or like why tech is the new thing. And, at the beginning of even, in that work, and then when I transitioned onto my own advisory firm, the conversations were started as, do Africans really have internet? And, are there really developers in over there? Do they have, how can they have, be technically inclined if there's no running water? Those silly questions. To now it's like, what are we thinking of the IPO market, and what are we thinking of, the Toronto, US and London IPOs of African, specifically Nigerian businesses that have even happened in the last 12 months alone. And so it's been a really exciting transition. And so in 2014, 2015, I initially tried launching a fund, didn't work, had about a year of professional work experience post-graduation. And people are like, you should go to Africa and do stuff there and then come back. And so launched an advisory company assisting some of the world's top technology companies and venture capital funds to enter, and so for some of them to actually help them operate over a subscription basis across the continent. And from our sort of tour of tech, investment tourism, to our market operations, like running firms Africa strategy, we worked with from Y Combinator, Techstars, 500 startups, GitHub, USAID, the list goes on. And with a number of our clients in 2017, we actually launched Ingressive Capital, which at the time we thought would be a $5 million fund. But in last year, we closed with investors, including, if you know, the Foundry Group guys, and Plexo Capital, which is backed by Alphabet and GV, among others, and also the Nigerian Sovereign Investment Authority. So we do have some institutional investors. And then we closed on 10.2 the end of last year. And this year we've just been fully deploying. Yeah, exciting times.
Did you always think you were, when you were at JP Morgan, did you always think you were going to be an entrepreneur and do your own thing?
So the thing about being an entrepreneur, I'm really not good at doing anything other than what I want to do and what I think is right to do. So subsequently, I don't work the best within major institutions. And when Morgan, I really thought, they don't know about the global opportunity in Africa. They don't understand that misalignment and allocation of capital and how much greenfield opportunity there is in emerging markets all go within the organization, and I'll teach them how to do it. No, I was a cog in the wheel. So, I did. There is some disillusion, or there was some, non-familiarity with the way corporations work at first, but then after a while, I realized you can't change the system.
I think a lot of it is, and I always tell people, like, being an entrepreneur is not a career path. It's like a thing you go do, and the career path sort of materializes along the way. But like, you don't really know when you're getting into it that it's like, well, I'm going to be an entrepreneur. It's sort of like, I have to go do this, and then it kind of.
If there was an organization that did the thing that I wanted to do, I would have been working within the
Right.
organization. Unfortunately, there wasn't this opportunity in the market when I started out pursuing the thing that I was very passionate and had a strong conviction about, which was the development of the technology ecosystem across Africa and the opportunity for technology to empower and improve societies at large in developing markets. And those are some of sort of theses which just happened to align with my work in venture capital.
So talk a little about what it was like to create a fund, because I haven't done that. I joined a firm that had funds. It's a pretty unique thing to do, and it's very hard to do. I mean, I meet with a lot of people who are trying to start funds. It's really hard to get LPs to back you when you essentially don't have a track record. Mm-hmm. How did you do that? I mean, you obviously know the market you're going after as well as anybody. Mm-hmm. It's a little bit of information asymmetry where most investors in the US really don't know much about it. But how did how did you start the process of getting people to back you and say, yeah, absolutely, I'm going to allocate capital to you? And how did you get momentum to where you are?
Yeah, I would say I was essentially soft fundraising over the last 6 years. Like since I started Ingressive Advisory, the advisory firm, I was building data points that I knew I could eventually transition into capital if I proved out the we're doing for those clients. So yeah, when we had the advisory firm, we were bringing firms to the continent, introducing them to co-investors, assisting them to source and invest in their first deals on the continent, doing market research in their target demographics, helping them launch programs on ground. And because we were successful in doing that, it had enough data points where, when we were raising capital independently ourselves, people didn't really have a lot of arguments. And, I really, in 2014, 2015, I really just wanted to start a fund and that came from, at first I just wanted to work at a VC fund. And people are like, you should do events, you should, you should be assisted. Like people just didn't really believe I had the capacity to even be an analyst at a VC fund. So I was like, well, I know this is my path. So if I can't come do it with you, I'm just going to do it. But yeah, I'd say, especially for those who have non-traditional backgrounds, it's really based in being able to prove whatever you are saying that you can do through whatever sort of path is possible. So for me, I couldn't immediately have capital to be directly investing, but I could be referring those deals and helping major investors close those investment opportunities into companies that I truly believed in.
I love the way you described it. I was soft fundraising for 6 years. It's always amusing to me when people, in our world will say, oh, we raised our fund in 2 weeks. I'm like, well, that's amazing because you have a 17-year track record that led to a 2-week process of closing. Yeah. But like everything you did for the several years leading up to that leads to the conviction that investors have to actually give you capital. I love that story. That's amazing the way you did that. Can you, so talk a little about what is happening in Africa, like set the table for people who don't know. Where is the state of the tech economy? I mean, you gave me some great stats about developers and what's happening. I think it's just fascinating because it's such an unknown market for a lot of people in the US and yet so big and so much, I would argue so much potential ahead. And I know you would.
Absolutely. So to paint the picture big to small, I'll start with like the macro and then go into the micro of what's actually happening. But on the continent, there are 1.2 billion people in Africa. And in our target geographies where we're operating, we do Nigeria, which is about 200 million, or, Lagos, which is 20 million in the single city, Accra, a little over 1 million. You have Greater Kenya, which is like 50, 60 million people. And then you have Egypt, which is 98 million. So you have, these pockets of urban city centers, very tech enabled. As far as the population themselves, and the 1.2 billion people, 75% of them are under the age of 35 and 41% are under the age of 15. So very young population. And then across the board, you have about ranging from 85 to 98, but average of 93% mobile penetration. So number of people who have cell phones. And that's over, I think it's 747 now, which is million mobile users, which is well over the number of in the US and UK combined. So there are more than the US and UK combined. And then within that,
you said 70% of the 1.2 billion are under the age of 35.
Mm-hmm, mm-hmm. Wow. And and then within that, in our target, Nigeria, Kenya, Ghana, and Egypt, the internet penetration ranges from like 35 to 55. So about half of those who have cell phones are actively using internet and are actively online. And that's to say, it's not necessarily because there's not internet, because in all of these places and most places on the continent, there is, technology enablement, there is fiber, infrastructure. However, data is really expensive. So in Nigeria, for example, the average per capita GDP is about $2,000 per year, and the cost of data is about $2.2 per gigabyte. So it's really expensive, and that's why when you're building Africa solutions, you really have to think of the African like it has to be. Streaming services are a challenge, and sort of for the elite, consequently, because data is just really expensive. You can build technology companies, but you have to think of Africa-specific products, similar to Facebook that built out their Facebook Lite, which is a 1 megabyte app. So there has to be different iterations that are targeted to the African continent. And then as far as sort of consumer...
Will that change, by the way? Will the cost come down with 5G?
Yeah, absolutely. Yeah. So right now in Nigeria and Ghana and in Kenya, the government is subsidizing the cost of internet and as well as the infrastructure development. So ensuring that, not just the urban city centers have high-speed internet, but then spreading it across the rest of the country.
I know that's been a big unlock for India with Reliance Geo as well.
Yeah, exactly. That sort of totally pioneered the technology ecosystem. I would argue, as it is today, is having those major players, those private sector in the telecommunications space, and provide the low cost data, which then provides a platform for everything else to develop. So that is as far as the basic market dynamics, and as far as we've seen from the capital side. So from 2016, there was about 129 million of VC dollars that came into Africa or greater African ecosystems. 2017, that was about 560 million. 2018, that was like 1.2 billion. And 2019, last year, it was well over 2 billion. And so every year it's been about a 2x. And there's not really a whole lot of other ecosystems where you see a 2x every year in the amount of VC dollar growth. So it's been, it's just a testament to show not only the development of the ecosystem itself, but also the international investors like Andreessen doing Zipline and Branch, and then Greycroft leading a bunch of fintech deals on the continent, WTI, Social Capital, Google Ventures, GV and their Andela, et cetera. So you're seeing, and Sequoia doing OPE in Nigeria. And so you're seeing a lot of top tier VC funds, and Y Combinator's done well over, I think now 30 deals on the continent. Techstars is 500, et cetera. So the global top tier VC funds and incubators and accelerators are actively investing on the continent, and we're seeing IPOs. So with the companies that we invest in, we're a Delaware incorporated fund that invests mainly in Delaware C Corps with wholly owned subsidiaries on the continent. And the reason that companies structure it like that is because, one, fundraising. So I'd say after you get above $250,000, you will inevitably have a foreign investor on your cap table, and they just prefer those Delaware entities. But also because the IPOs, because African markets are relatively illiquid, there's between, depending on the government, between 50 to 200 sort of publicly listed entities, and the liquid ones are generally below 10. And so most guys are going to list the London Stock Exchange, the Toronto Stock Exchange, or the US Stock Exchange. So even in the last year alone, we had Helios Towers list for 1.45 billion. That's a Nigerian company in London. We had Helios, a private equity firm, dual list in Toronto, and we had Jumia. Of course, we've heard of this, and the Nigerian e-commerce company lists on the New York Stock Exchange. And later this
are the infrastructure providers like the accounting firms, and are they local as well and able to provide services to these folks to help them deal with U.S. accounting standards and things like that?
Yeah. I mean, all of the KPMG, the Deloitte, all those guys have operations on the continent.
Yeah, I would assume so.
Yeah. And also, I mean, we operate in, GAAP accounting standards as a Nigerian entity and as a foreign entity. Yeah. So it's roughly the same language.
And are a lot of the folks who you mentioned, a bunch of firms here in the U.S. that are investing in Africa, are people on the ground? Are they traveling, or are they, investing through you? I mean, how are they getting comfortable with the local environment?
Yeah. So a number of ways. So I think A few of them work with local partner venture capital funds, and sort of it's like you establish a friendship, and then the people, you trust me, and then I show you a deal. Hey, check out this exciting company, and that's your first sort of opportunistic Africa deal. The other one is because so there's a lot of early stage investors, and there's a lot of like up to post seed and sometimes even all the way up to Series A. But from Series A to Series B, there really aren't a lot of funds specifically focused on sub-Saharan Africa or Greater Africa.
Right.
And so the deals, most of the guys actually have to go to Silicon Valley or have to go to London in order to fundraise, and their economics are crazy. It's like they have significantly more traction and growth. The valuations are lower because, there's less competition for the deals. And so they just, sometimes it's sort of an opportunistic door-to-door knocking. And then also I've been finding recently, a lot of African founders no longer need a passport because they can leverage social media. They can reach potential investors on Twitter and on LinkedIn and on social media. So they know the names and are reaching out themselves.
That's cool. That's cool. And what, like if you were to point to sort of two big trends for the next 6 months, what are the things that people are getting excited about? Obviously, one of the things you and I talked about is the rise of the kind of developer economy, which I think is super cool. But what are the, like, are there a couple of different trends that people are like all in on these concepts where there's just enormous opportunity, great teams putting together businesses, et cetera?
Yeah. So I first want to explain sort of the trajectory, the typical trajectory of a technology ecosystem in emerging markets. And it typically goes from like the telecommunications infrastructure. That's like level 1.0 is just like the towers. And that's basics. And then it goes to financial services. So like the banking infrastructure, and then the B2B technology on top of that. So that like the switching systems, like allowing banks to communicate amongst themselves to transfer deposits from one bank to another. And then the next tier is like the development of the internet, so like the Reliance type businesses, as well as the B2C, so like the M-Pesa, the mobile money, things like that. And then that's really where the technology companies as we see them today really can develop from. And that's when e-commerce, that's where, the next wave is e-commerce, is different iterations from mobile payments, is different iterations of lending and sort of digital services, and then open banking, and then sort of all the different pockets and social plays from there. So that's sort of like the trajectory of generally what we've seen in India, generally what we've seen in China, now what we're seeing across sub-Saharan Africa. And so where we are right now is where the first sort of version 1.0 to version 2.0 are publicly listing. Version 3, we're even getting into the random e-commerces like Jumia, et cetera, publicly listing. And then now the major raises into the next iteration of technology products across the continent. And so we're seeing a major move in mobility. So on the continent, again, also, I'm not betting on Africa to be the pioneer of most advanced technology solutions in the world. It's not going to be competing for artificial intelligence and machine learning, advanced, maybe in future years, but where we are currently, there's still sort of subsistence tech needed. So the basic to make mobile money payments, the basic to be connected to the internet, the basic to move from place to place, the basic to get a loan. That's what we're working on. Yeah. So it's still lending solutions, the Talas, et cetera, which have really boomed out of East Africa branch. And now we're seeing different iterations of that coming to West Africa and elsewhere on the continent. We're seeing a lot of mobility plays like the Gokada, the Max, the SafeBoda that are leveraging the internet access with the development of the sort of gig economy. And we're seeing, again, a lot of technical skills development. So as Coursera and Codecademy and Andela and these different sort of digital learning platforms become more accessible and everyone becomes entirely online, then Africans are sort of upskilling and then being able to provide their services to the Western world or the world. And really
one question I just want to ask you, you mentioned India. So we're an investor, longtime investor in China, India, Southeast Asia. What's different about Africa from those, obviously China sort of came of age around technology starting in 2000. So we're going back a ways, pre-5G, pre-mobile, even pre-iPhone. What's happening? The young demographic, it just must be compressing the cycles that China went through into and I guess what other differences are there from these other big economies that have emerged over the last decade?
Yeah. And, MTN came to Nigeria, and I believe it was 1994 when they were founded in Nigeria. So like we got sort of landlines in the 90s, which is, a little bit behind the rest of the world.
Yeah.
Interswitch, which is the fintech company that provides the switching systems in Nigeria, a lot of these guys were the early 2000s. So like the base level technology came in the early 2000s, which is already a while behind. The other major differences is the per capita GDP and the homogeneity of India and China and the heterogeneity of the African market. So you look at Africa and it seems like, African consumers, their demographics probably the same, their preferences, the culture is probably the same. It's so drastically different, and there's 54 of them on the continent, and you have places like Botswana, etc., where it's per capita GDP close to China, around 10,000, and then you have places like Mozambique or elsewhere in Southeast Africa, where the per capita GDP is down to 500, and versus Nigeria it's 2,000, etc. And so South Africa is the highest around, or one of the highest, around 5,000 per capita GDP. So I would say it's definitely around the heterogeneity of the actual socioeconomic status of the population, but also culturally. So the languages that are spoken in each country, you have your Francophone and Anglophone African nations, but within that, there are so many different tribes. Even within one country, there can be 100 different tribes, and they each have their own, local dialect. They each have differences, and then regulation wise. And so if you're creating something for India and China, it's general same regulation across the countries. But when you're looking at the African market, like Nigeria has incredibly volatile, not only regulation when it comes to the financial services and mobility. Like a company can be functioning one day and literally be shut down the next. Like that's happened even in the last year. Like when we're looking at Nigerian opportunities, we have to do, like, a main part of our diligence is government research, looking at regulation and what policies have exposure, or what sectors have exposure, and within those, who's going to be elected next, so that we know what happened with our companies, and sort of mitigating risk from that side, as opposed to Ghana and Kenya, which are very foreign direct, like FDI amenable, and very stable regulation. And then even within that, the actual devaluation or the strength of the currency, like the Ghanaian was just rated the highest performing next to the US dollar, so the strongest currency, whereas next door in Nigeria, we went from 360 naira to the dollar to 470 in a matter of 3 months. So it can go up and down, 470, then back to 380, then back to 560. So, and I'd say Nigeria is the most volatile, the greatest opportunity with 200 million people, and where the majority of the VC funding and the liquidity events happened on the continent. The other places are relatively more stable, but it's a smaller economy and subsequently or consequently a smaller opportunity.
And does the government, and I guess that there's not the government, it's spread out in all these different, do they, one of the things that to me that was remarkable about the rise of China was the government became very pro-business, because they realized that if they were pro-business, they were pro-job creation, that created wealth, it brought up incomes, and created tax harmony in the. So are you seeing this? So very big tailwinds from the government around technology and venture capital in China over the last decade. Are you seeing that in Africa as well?
So as I mentioned earlier, we were backed by the Nigerian Sovereign Investment Authority, which is like and we are one of the first two venture capital firms or tech-focused funds. I think we may be the first, and I'm not sure only, but potentially in Nigeria so far. So their active involvement in the VC space is very recent. And I know the Botswanan government is looking at the same. The Rwandan and Ghanaian and Kenyan governments their sovereign entities are just starting to look at the venture capital. So if we're looking at the sort of like sovereign entities, but even one step below, I would say Ghana and Kenya are closer to China in their, and also because you have to break it down by GDP. Countries that have built their wealth historically around natural resources like oil are less amenable to technology and FDI in its current iteration, because they're like, well, we already have this wealth in this way. We don't need to, adjust our policies. However, Kenya, you see the bulk of their economies built on services and specifically in financial services, because they didn't have oil to sort of sit back and delay the focus on integrating technology. So I would say it really is I've seen it's most closely tied to the natural resources of the country where you're looking. And that's sort of what's most directly influenced the government's willingness to encourage foreign direct investment and also develop or focus on technology development.
What a wild, I mean, I could talk to you for hours about this, but we only have a half an hour. So let me kind of wrap with, what advice do you have for people who are trying to learn more about Africa and the technology industry, investment opportunities? I mean, if you think back to like your JP Morgan day, I mean, it's always funny to me. People in the US are so, even for us in China, Southeast Asia, I mean, I always joke that most people in the United States think Southeast Asia is a country. Like the thought and I always tell people like, guys, there's 7.3 billion people in the world. There's only 330 million in the US. Like the majority of the world is not here. So what advice would you have for folks on ways to, on their own, learn more about Africa and learn about some of the opportunities that are coming about there, and learn where the investment opportunity might lie, even in the public markets, whether it's publicly listed stocks or mutual funds or whatever? Where can people get access to information to learn more?
Yeah. And I would say, I mean, if they want to learn more versus if they want to actively get involved, if they want to actively get involved, similar to how we have, 100% of our portfolio companies are African businesses and 33% are female founded because we are African and female on the continent.
Right.
So I would say it's absolutely essential to, if somebody wants to actively get involved in the continent, have somebody that's based there or directly poached from the African, wherever you're focused, from that ecosystem. Because as I'm mentioning, there are so many nuances that you would never consider investing in the US, like from the currency volatility to the regulation to even the recession. African nations are very cyclical, and somebody who has experience on the ground would be essential to start actively investing. But I do think that, there are a number of top tier firms that have actively started making investments, and it's because they're working with local funds. So finding, a friend firm on the continent that that you trust, that you can create a relationship to start seeing their deal flow. As 80% of our limited partners, so 80% of the investors in our own fund run the world's, funds that are larger than our own, some of the world's top global funds. And so we provide them deal flow.
Yeah.
So I'd say that's really important. And also there's a lot of literature online, ranging from, Tech Cabal to Tech Point, even TechCrunch covers some African articles. It's really, I would say, start there to get access to information and have, your buddy on ground that you're working with. And then also, because again, from the Series A and on, tech deals on the continent since there's relatively low competition as far as the VC dollars fighting over those deals, I would say pay attention to the news. Look at Y Combinator graduating classes. There's always between 5 to 10 African companies that come out of there. Techstars is increasing as well. So partner with top tier incubator and accelerators that have access to international cohorts, or come talk to us.
That's the best answer. This has been awesome. Thank you for doing it. I loved it. Every time I talk to you, I learn a ton. I feel like I always tell people when I talk to incredibly smart people on certain topics, like, when a dog sticks their head out the window going down the freeway, that's what I feel like. There's just a lot coming at me. But this has been awesome. So thank you for the time. I appreciate it. And we'll talk soon.
Awesome. Thank you very much.
Matt.
Bye.